Hi guys, Paul Seils from Conscious Investor Network. Thanks for joining us. Got a very special guest and an old friend of mine, Jet Yap, joining us to discuss what's new in crypto for 2022. Hi Jet, how are you going? You there, Jet?
Yes.
How are you going?
Good.
Good. Thanks for joining us.
Just popping out. I pressed the wrong button, so it just kicked me out.
So it's been a bit of a journey, huh? It's been a hell. We've been discussing about the crypto market. Some of us have been involved in the market for a while. I mean, I sort of got involved back in 2016, 2017 and ridden the ups and downs of the market.
Yep.
So it's an interesting time, and it's certainly a good time for people that are starting to join the conversation about what cryptocurrency makes possible. And I think we just wanted to sort of dispel some of the myths and the illusions about cryptocurrency. And it's a good time for people to be entering the market because it's shaken out a little bit. And a lot of us, including myself, have learned a lot of lessons, and sometimes very expensive lessons as well. We can touch on that a little bit too, but particularly in relation to potential of projects. But it's a good time because we've sort of made those mistakes, and then people that are coming into the market now get the benefit of the hindsight that we've sort of developed over the last, maybe 5 or 6 years or something or other. But can you give us a little bit of context about your background? And I mean, I know it personally, but just for the others that are listening or in the group, your background and your involvement, your expertise, etc.
So a bit of my background. I'm Malaysian by birth. Sort of born in Malaysia, lived in Malaysia for probably about 21 years before I sort of headed off the United Kingdom and been abroad for studies, and went back to Malaysia for work as a computer science graduate. And it was during this time I came across Bitcoin just as a bit of an experiment at the time. When I heard about it, it was 2010. And what really got me interested was because I have been, in computer science, and all this while been looking at the internet and how it's sort of grown from command line to a screen with icons to like having internet access and being able to browse websites, and the natural progression from there was payments. Prior to Bitcoin and prior to credit card payments, it was actually a very simplistic system. So like back in the 90s, we actually had all of these credit card information sent across networks via plain text, and a lot of the information was stored in cookies. So cookies are essentially what you use, or what's actually stored on your computer to track you, or in a sense like to remember that you have visited the website, and like if you filled in certain forms, you can do like an autofill, and all of these functionalities were provided by cookies. And so as you could imagine, back in the 90s, fraud was actually like one of the worst things in the digital payment space. This was like pre-PCI DSS days, and when we actually had internet payments at the time, I remember they were like very insecure because you could just put in your credit card number, and then you could put in like an expiry date, and it would just process the payments. Today we have like a lot of controls. Like you have this one-time payment PIN, OTP. And you also have, like checks for the CVV, the expiry date has to be valid, and it has to match your name, match your address, so it's grown a lot since then. So, when that first came out, I think the next thing that happened was, the introduction of, at the time, they had this thing called e-gold. I'm not sure if you've ever heard of e-gold. It came out at the same time about Liberty Payments and PayPal. They came out around the same time. I think it was the early 2000s, just after the Y2K. And back then there were a lot of this, what they call high yield investment programs, HYIPs, right? It's a short word for scam. So like as you say, benefit of hindsight, like playing around with HYIPs, and I think at the time they were doing something like, click an ad and you get paid. And it was getting paid like something like 1% per day. So all you have to do is sit in front of a computer, watch ads, and you get paid. So yeah, that was how I sort of, really got onto this, the digital payments and got to really learn a little bit about like, what actually makes it work. And so that time when eGold first came out, I think it was a really, really creative idea, and but it was not decentralized, right? So someone had gold bars, and then they basically allocated grams of gold to you, and you had like an account, and your account had like your grammage, and then your grammage would have been converted at any spot prices when you transact with someone else on the network. So that was a pretty interesting experiment for, I think, about 2 years. And then what happened was the US Feds, they came and they basically closed it down. So they had a subpoena, and then they closed the whole thing down, and then never heard a beep after that. So whatever credit that you had inside was just gone.
Yeah.
Gone into thin air. And so at the time, I think it really made me notice that, this was actually a very scary space, because, like you can't really keep your money, like it's, you sort of have this thing called, we call it counterparty risk, because you're sort of relying on a third party to, ensure that you have access to your finances. And I think 2007, 2008, I was sort of very much into, the other financial instruments such as unit trusts, mutual funds. And, so at that time, I've already ridden through maybe, one major recession in Malaysia. That was in 1997. And so, like I was sort of fearful that, like we were going into another one. And, we had that around 2007, 2008 with the subprime crisis, in the United States. And obviously we felt it around the world as well. So leading on from that, I have never really heard about Bitcoin, until about 2010, late 2010. And, one of my friends told me, he said, hey, have you ever heard of this thing called Bitcoin? I hear, like people are, sort of using that as means of, trading, black market stuff. I was like, what's that? And then I did a bit of search on it. And what got me really interested was, the title of the white paper, right? It says it's peer-to-peer electronic system. And I thought, like, this is really creative, because, we've never actually had that in the internet space, because we had like file ownership, we had file sharing, and through like BitTorrent, we were actually able to share files with people on the internet, like peer-to-peer. But we never actually had a financial system. So this was like the first goal of actually creating a financial system, right? Like with Bitcoin and all that. And at the time, it was really just an experiment, because at the early days, we never had what they have today, like they call it miners, Bitcoin miners. And essentially Bitcoin miners today is just like a machine that only does one specific algorithm or function, which is to calculate hashes for Bitcoin, right? And back in the initial stages, it was all using your computer processing cycles. So at the time, it was like, it was really just similar to protein folding. Like back in the day, we had this thing called folding at home. And basically it means you had, say, your graphics card, and you could have like your resources allocated to a university to do protein folding, to assess like, cancer research and, research on like, DNA and that kind of things. So, it was similar in that sense that when it first started off, it was just like an academic, like approach of, just like a thesis, right? It's a peer-to-peer electronic cash system, but there was no working case. And back then it was all like just command line. So actually to interact with the blockchain, you actually had to, like write commands. And as you can imagine today, it's really quite difficult, right? Like, we had to have the seed key, and you have to, make sure you store the 12 words and all that. Back then it was actually even more, like verbose, you had like it just gets printed on your command line. And then after that, like, you have to make sure that you store it, and, and you have to follow all these good practices, not to put it into a file where it can be, scanned and things like that. And I think that was where my journey really started off, and learning about Bitcoin. And I sort of bought like my first Bitcoin around 2011, late 2011, from a very popular exchange that is no longer existing today called Mt. Gox, which was based out of Japan.
Yeah.
And I'm not sure if you know much about the history about Mt. Gox. Mt. Gox initially was a web sales portal for Magic the Gathering cards. That's why you see MTG, Magic the Gathering.
Right.
And then it somehow it just turned into Mt. Gox. So that the history behind that exchange was that it was actually used for trading Magic cards.
Wow.
And
I didn't know that.
Yeah, that's a bit about history about Mt. Gox, really. And so that was the one and only exchange that they had back in like 2011. And like the only way you could actually get money to that exchange was to do a wire transfer. And it used to take about like 4 or 5 days.
Yeah.
So the risk factor is quite high. You gotta go to a bank, and back then there wasn't really like much internet banking, so you actually have to walk into a branch, fill out one of these forms. So I filled out one of these forms saying I want to transfer like $500 to this company in Japan, and then they will convert your local currency into US dollars and wire it across. And it took me about 2 weeks to actually see the funds get credited into my account. So for 2 weeks, it's just sort of like like twiddling your thumbs and wondering, it's like, oh my God, is this payment actually going to go through? What if it went into the wrong account, or what if they don't acknowledge, or what if it was bounced, like
floating in the ether somewhere.
That's the early days, and fortunately, like my account was credited in like 2 weeks, and immediately when it's credited, I went onto the website, I bought the Bitcoins and I pulled it out. So just very, very cautious. And so I pulled it out into my wallet, and I've never really touched it, but I sort of really got hooked on with the idea. It's like a bit of a rabbit hole. So as I started to learn more about it, I thought like, hey, you know what, this is actually kind of like like revolutionary. Like it can really change a lot of things, because the way that we are sort of being manipulated or being controlled today is actually through the financial system. Like,
Yes.
and so just to give you a bit of an idea, like during 1997, back in Malaysia, we I think we had about interest rates that were probably about 5 to 6%. That's savings interest rates. And like I think in 97, the Malaysian government was a little bit adventurous. They went to play around with forex swaps, because they wanted to leverage higher interest rates in foreign countries. So they actually sent, like exchanged the ringgits for like Australian dollars, and then they put them into an Australian, fixed deposit account that was probably paying somewhere around like 8.5%. So it was, probably about 2.5% higher than locally. But what happened was, there's this guy by the name of George Soros, who was a very intelligent guy.
Good old George Soros popped up again.
Sort of sniffed out that, like some of these countries were, using these techniques, with leverage. And so he basically came in and he, like used this money to destabilize the whole thing. And that caused the collapse in 1997, because he created the spreads, and then after that there was like big spreads, and then that 2% profit became a massive loss, and eventually the country went into a bit of a tailspin, and then and they had to basically curb the inflation by increasing interest rates. So at the time, fixed deposit interest rates for like 3 months was something like 14.5 or 16.5%. And so as you can imagine, if the base lending rate was 6.5% for a mortgage, the annual, the amount that you had to pay on your mortgage was something like 21%. So I think all that really, really started to, like make me very, I guess, cognizant about the whole, the manipulation on the financial system, and I was looking at a way of how we can, sort of get out of this whole game, because we also had this thing called the Unclaimed Money Act. So if you leave your money in the bank,
Yes.
you don't touch it for a year, it's frozen. And then in the next year, if you don't touch it, it gets forwarded to the government bank account. And unlike the Australian counterpart, the Malaysian counterpart, like when you try to write in, they don't really respond to you. They say, oh, like, so, once it's gone in, like trying to get it back is actually a very daunting task. So at the time, I think, like what I had in my head was just like, I just wanted to, put my bet on it, because, it was something that was untried. And having lived through, the internet in the 1990s era, I sort of see the potential, like where it could eventually go. And from there, I started really getting involved into like, Ethereum at the very early days. I bought like some Ethereum at like, I think it was at about $1 at the time, and yeah, today Ethereum is something like $3,500, right? So
yeah, USD.
Yeah, so I mean, but at the time it was all just experimentation. Like there was people were looking at it as like ultra risky assets, but back then, a lot of us were like really like, I guess you can say terrified, like with the movements.
Yeah.
And nowadays I look at people and I see, people putting money into like, ship coins and, like some of these newer like dog elon coins. And I'm like,
Ape coin.
I'm like, oh, there's not much I can say. You're not going to change their minds. They treat it as a punt. So, but yeah, that's how it's evolved, from, really early days to, what it is today. So along the way, you can see that there's waves of progressions. First started off with command line, and then we started having, like a GUI, which is a graphical user interface. So rather than actually like, typing commands, we actually just clicked on buttons. And then, we had like first version wallets, and then it slowly progressed from, like desktop-based wallets to web and mobile-based wallets. And that's sort of when it really started like, growing, and I think this was at the early days, where there wasn't really much DeFi at the time. It was just centralized exchanges, propping up and, offering a couple of coins, and, they had about maybe 20 pairs to 50 pairs, and, like, yeah, it was a very small market. Today you see like 20 or 50 pairs come out like maybe every hour or so,
Yeah.
The rate has really accelerated. So, like, if you're just looking from that perspective, you can say that like it's really sort of taken off, in terms of like there's magnitudes of growth. Yeah, that's a bit about my background, and how much I've sort of been in this space. So, like, I sort of like live and breathe it, really.
Yeah, that's great, Jet. I think the thing is, as well, is that I want to touch on, and we're going to have the conversation first, and then we'll close out for the live stream, and then go to the questions for the Q&A for our private group. But I think the common question that people sort of confront having to come to terms with, like what is the currency backed by? And I think, I have this conversation as well with people that are new to entering the space, like what creates its value, what's it backed by? And I sort of say to them as well, like, apart from the collective agreement, like who says the value of what $100 note is that costs 11 cents to make? But all the newbies enter the space, and now it's like like you said, 3,600 for an Ethereum at this point in time. And what apart from the obvious of like demand, but what is dictating value at the moment as far as Ethereum and Bitcoin is concerned?
Yeah, I've been hearing that question since 2011, to be honest. It's the first question that everyone asks. It's a bit of a paradigm shift, because like the way we associate money is that we have a centralized authority that like issues a currency, and then as the countries issue this currency, it sort of gets distributed downwards into banks, and that's how we get to borrow money from a bank, and that also gets paid out as wages in the local currency. With cryptocurrency, it sort of works in a slightly different way, right? Like we look at every cryptocurrency, initially when it starts out, it has no value because it's literally created out of thin air, right? So if you look at how, the first Bitcoin, the Genesis block, right? When it first created the first 50 Bitcoins, it was just basically like, it was a success message that pops up, like block one, right? Like, and, for people in computer science and people who play games, it's natural for them because like, when you play games, you get issued with, like virtual currencies inside the game that doesn't actually have any underlying value, right? It's just like a unit of account. And I think for the younger generation, it's just like a game, right? It's like an extension of a game. So, if you're playing computer games, you were playing like PlayStation games, if you're playing, like online games like World of Warcraft, or even just like text-based games, like back in the days, they have web browser games, and now you have mobile games, you have like credits or gems. It first starts off like that, right? Like you have credits, and what you use the credits for is to grow the network. And how the network grows is by more people using that network to perform an activity, right? So in the case of Bitcoin, the activity is exchanging value, right? So if the guy that spent $10,000 to buy pizzas did not do that, we wouldn't be here today.
Yeah, that's a famous story, Jed, about a guy that bought pizzas for, I can't remember how many Bitcoins he would have paid for them back in the time.
Yeah,
we have an annual Bitcoin pizza day.
I used to remember giving people something like 0.1 Bitcoin, 0.5 Bitcoins, like just giving them away, say, come on, take it, man. Like, you just want to try it, and today I look back and I say, wow, if I just kept that 0.5, it would have been like, probably like, 20 grand now, but it's sort of like, that's why I say it's more of a movement rather than it being, like looked at as a currency. So we have to look at it and say that, like it is the value of this currency or the value of this cryptocurrency is actually based on the strength of the movement. So, if people feel that there is a need and they feel that there is a place for this, new asset in our lives, then, we'll see more and more use cases being built on it. So like some of the things that we see today with the Bitcoin network, they were actually sort of like vision of someone, like that looked at the network and say, oh, like I think we need to really fix this use case. And they spent 3 or 4 years, building open source code and like writing all of this and making it work and getting people, to contribute. And like, so the value of the network today is actually an amalgamation of all of the man hours that all of the developers put in to make the code work, all of the hours that the miners have put in to keep the network alive, all of the time that all of the users have put in to it transacting, and also all of the money that the traders have put into the system to like to create this whole momentum, right? So it's a fluid system, so that there's no like and so that it makes it very, very difficult to give it a value or stagnant value, because firstly is you don't know how many people are actually using the blockchain, right? So if you don't know the exact number of people using blockchain, you cannot objectively say the number of users, because the whole premise of the system is it's pseudonymous. Anyone can use it. Anyone can transfer these credits across the system with no restrictions. Like so in a way, the system doesn't care whether like you are Asian, whether you're from China, whether you're from Africa, whether you're from Russia, whether you're from Ukraine. It doesn't really matter. It's sort of like apolitical, and like it doesn't really care about your your biases or your preferences. And I think that's sort of like what comes close to universal access, right? Like when we say universal financial access, I think this is what comes closest to universal financial access, where you don't bar someone from the system just because they do not share, a similar political affiliation or, like ideology with you.
Yes. It's interesting as well, watching how the markets, the trends and the moods, how it's moving backwards and forwards, because I was involved with assisting those guys. We set up like 250 retailers and services and businesses throughout Brisbane, for example, that were accepting cryptocurrency at point of sale. It seems to have tapered off a little bit. I don't know why that is. It's maybe just people are just hanging on to their cryptocurrency and they're not sort of trading it so much anymore.
Yeah. So that's where the progress have happened, right? So because in the early days, you only had, what we call now level 1 blockchain. And essentially the level 1 blockchain is sort of like the foundation, right? So, like Bitcoin is level 1 blockchain, Ethereum is level 1 blockchain, like even Ripple, Stellar, anywhere, all of these are basically level 1 blockchains. And, they took a couple of years to build that momentum, because you have to have a user base, and then you need to have centralized exchanges that support this cryptocurrency. So the exchanges actually have to build the code to be able to store this currency in their the cold wallets, being able to move the currency from a cold wallet to a hot wallet, being able to have multi-signatory approvals, and the processes around it. And they need to have communication with the developer teams, to make sure that certain bugs are addressed, and if they have difficulties when they're coding. So there's a lot of things that come into the equation, and it's literally taken these 10 years to build up all this infrastructure, right? And today we look at it, it looks like it's just working. It's the same thing like Facebook today, a lot of people don't really know that, when we type HTTP, double colon and then // that's a protocol, right? Like most of us don't even know that what's that protocol. And then you type HTTPS, it's a secure protocol. It's the same thing with Bitcoin, right? And all these cryptocurrencies, it's taken the internet 20 years, 30 years to get to that point. We see in cryptocurrency, the speed is almost at least twice, if not quadruple, as fast as what happened in the previous internet, the what I call the boom, the internet boom.
Mm-hmm. Yeah. And the interesting thing is what we're experiencing at this point in time, I was having a conversation with someone about this in the last couple of days as well. I think what we're sort of experiencing locally, nationally, or even internationally is we're seeing a peeling out into what is being termed parallel economies at the moment. So we have the whole concept of centralization and decentralization. When I was in the States, one of my presentations that I spoke about in the States was decentralized now. And we've been experiencing, particularly in the last couple of years, the effects of of a hierarchical system of management, and why it's important to decentralize. But for people in relation to the analogy of cryptocurrencies, can you just explain the difference between centralized currencies and decentralized currencies?
Yeah, so centralized currencies are essentially something that was mandated, right? Think of highest authority, right? Royalty, a monarch. A monarch, gives authority to a central banking institution. So say let's just use the UK as an example. You have Queen Elizabeth. She her predecessors have given the royal bank the access to mint currency, and they have an underlying treasury that they use as a means of converting these bills that were issued out into whatever currency that they were holding. And at the time, they called it sterling pound, right? So it actually used to mean sterling pound of silver, right?
Yes.
They could actually bring a bill in,
yeah,
and that bill would exchange into certain units in silver. And in 1971, when Richard Nixon sort of came into power, and they had some financial difficulty, and they needed to fund whatever activities that they needed to do at the time. and they actually had a period of like gold shortage because you had to physically transport the gold. And while it's in transport, there was a lot of things that could happen. You have pirates, you have like sanctions where you couldn't go to certain places and all that, and it created like supply shortages and also supply blocks, kind of what we see today with oil, right? Like and that's why we have different places where the prices of oil will affect day-to-day goods and everything. But back to where we were with the currencies, like it was issued by a centralized authority, and then after that, like the subjects, basically citizen like you and me, would use that because it has the promise of the highest authority in that system. And in the decentralized system, it sort of works like you opt in, right? So if you buy Bitcoin, you're opting in. You're not required to own it, but you can opt in. So when you exchange physical currency or your centralized currency for a decentralized currency like Bitcoin, you're basically opting in. So when you opt in and when you swap with somebody else, that money actually gets locked into that system, because if the price doesn't go down to the floor, there's a residual value that's actually being stored in that network, and that creates that the price. There's a buying price and a selling price. It sort of creates that I guess the midline or the median for that price and the value. So in a decentralized system, it's basically just tokens. Let's just say it's like tokens or tickets that were being issued, and these tickets don't actually have a fixed value, and so then it's really depending on what people are willing to exchange it for. At the end of the day, I think today in the world today, we actually need to have a bridge, right? Like where we have the centralized system and a decentralized system, and they actually have to have a connection between both of these. So one analogy I like to use is that think of like if you go on a cruise, the cruise once it travels out past a certain point, they say it's international waters, right? And once you're in international waters, they open up a casino, and then it's free for all. And so it's no longer bound by the rules and the restrictions of the country where it set sail. Cryptocurrency is similar, right? Like, so you think of cryptocurrency as actually like being in international waters, but you are physically not in that international waters because it's ethereal. It's not physical. It's digital.
Yes.
So
I guess,
like you're having in sort of like ownership or access into this international waters while you're still actually being physically where you are.
And I think that's the other concern, is that people entering the market at this point in time as well, that are concerned about what's happening as far as the Great Reset's concerned and the World Economic Forum, etc. Is part of that narrative is to steer people towards the digital currency, the digital centralized fiat currency concept. And a lot of people are fearful because they think that's part of that agenda, and explaining to people that yes, some centralized currencies are about that, but I'm a bit of a purist when it comes to cryptocurrency, about why it was created as an alternative to debt-based fractional reserve banking systems. But I think that's the concern as well. There's a bit of unreasonable sort of fear about like the digital currency being like control as far as the New World Order agenda, etc. Jet.
Yeah, here's the thing, right? Because all of us are fearful of what we don't know. And the more we know about something, it sort of gives us a bit of like, I guess, enlightenment. We understand, and we're able to discuss it in more detail. And I think a lot of us have gone through, a couple of these journeys in the last 2 or 3 years, right? So for example, learning about viruses. Before coronavirus, most of us won't even be able to tell the difference between influenza, a cold, rotavirus, and coronaviruses. But today, I think you speak to a majority of the people in the world, they at least have a distinction between, COVID and not COVID. that's the base, right? Like if you go a level deeper, you understand coronaviruses, influenza, and like rhinovirus are the main cause of the symptoms. If you go a bit further, oh, okay, there's also like rotaviruses which are circulating among predominantly among like children, right?
Yeah.
And then you have this RSV. So I think it's the same thing, like with anything, as we start to learn more about it, we have a clearer distinction of what is and what is not.
Yeah.
And it's that journey that people have to take in steps to get to that level of understanding.
Absolutely. And I think this is part of the thing as well. I mean, even people, I'm going to share my screen and just show this as well, but just mention about, people, even prominent public people like Robert Kiyosaki, Rich Dad, Poor Dad, sort of being concerned about the the US dollar at this point in time. I'm showing this website. You've probably seen this before, Jet. This is fiatleak.com. And this shows all the money from the fiat currencies that are running into the cryptocurrency market at the moment. And that's pretty slow compared to what I've seen it run at previously. And that's just for America as well, right? So you can actually see the global map, but these guys have upgraded their platform as well. But it's astronomical when you see the volume of people flowing funds into the cryptocurrency market at this point in time globally.
Yeah.
Yeah.
And here's the irony of it, right? Because we look and say, oh, look, there's so much money that's flowing into cryptocurrency, but like no one's batting an eyelid when like a couple of days ago when Biden just signed like $1.5 trillion into a bill, and then it's just created into the economy. No one bats an eyelid about that. Like people are looking and saying, oh, look how much money is going to currency, but like, why doesn't anyone talk about the fact that like we've got like $5 trillion printed in the last like 2 years?
Yeah. I can't remember what it is in Australia, but when I was in the US, I think I can't remember the statistics accurately, but as far as physical currency, I think like 80% of their physical currency had been created in the last 3 years.
Yeah, I believe that in 2020, it was something like 20 or 25% of the total US dollars that are ever in circulation was created in that year. And then we had 2021 and 2022, and there's been, like equal amount of currency that's also printed out. So, like I think we're sort of looking at maybe like 45% of all of the country, the currency, the US dollar currency that's ever in circulation was actually created in the last 3 years.
Absolutely. So we might close out at that point in time for the live stream anyway, Jet. And I'm going to put the link for the $20 worth of free Bitcoin for anyone that wants to get started in that space. We'll have you joining us from month to month as we go forward, moving forward as well, Jet. But I'll just close out on the live stream section of the component, and we'll go to the private Q&A group session with our group. That'd be great. Sure. Okay, that's off. Okay, cool. So anyone's got any questions for Jet that they want to ask, can either raise your hand or jump in or type your question or whatever you want.
Hi, Jet.
Hello.
Hello again, Paul.
Hello, Chelsea.
So what am I looking at with fiatleak.com? What does that show? Just looks like a Space Invader game.
Yeah, that shows all the money that's being transferred out of the fiat currency, so out of the dollars, into cryptocurrency.
Okay. Even though it's so low at the moment, everything's gone down, everyone's still pouring that much money.
Yeah. Well, you'll find, sorry, you go, Jet, but you find people will pour more money into the market when it drops.
Yeah, so essentially that Fiat Leak just shows you whenever money enters the cryptocurrency system. So whenever someone buys Bitcoin, or when they buy Ethereum, or when they buy Dogecoin or Shipcoin, that's why you see all those logos that come in. So like that means someone's buying those coins. So the Fiat Leak shows you, how much money is actually going into the cryptocurrency system and what's coming out of it.
Okay, cool. Thank you. So no, I'm new to this. I've only got a wallet that's got, you know, 8,000 or something dollars in it, and just with the Bitcoins and the Ethereum and you know, a couple of other ones.
Yes.
And I've got, so my son is really keen with it, and he's 16 and his friends are all, you know, keen with it. So I'm taking my advice from 16-year-olds who have done quite well in this space. But yeah, keen to learn more and to give anything a go, really.
Yeah, I think first of all, like, welcome to you know, this crypto world. I think you'll find it a very interesting space. There's never any boredom in the space, you know, like there's always news and there's always insights and I guess a different perspective, you know, because again, it's a paradigm shift. So there's obviously a different perspective, and it's probably going to be contrary to, you know, like what most of us have been used to or have been taught, you know, in any sort of like education system that we have had in the past.
Yeah. So yeah, thank you. So I'm just waiting now until because I've been purchasing in my personal name, so I just have to figure out the next thing is how to purchase more after that in the companies or the whatever.
Yep. It's very good to hear that you have gone with, like, you know, the really conservative things like Bitcoin and Ethereum. You know, I always tell people, like, you know, as much as you want to, you know, like chase the next gold rush, you know, the one and only thing that has really brought us to where we are today is Bitcoin. And Bitcoin is probably like the only system that is, when we say, you know, like you hear this term proof of work. So proof of work means that there's actually like machines that are running, doing these calculations in order to get to, you know, the to try and find that block. You know, it's like a puzzle, right? So everybody's like pushing this hash, different combinations, and they're trying to win that combination game. And that's what keeps the system secure. You know, like you need to have proof that the work has actually been done. That's why it's called proof of work. No other system has that level of security, because that level of security is only actually generated by work that's done, if that makes sense.
Yeah. So the kids have got me Avalanche, Solander, Cardano, something or other.
Cardano?
Cardano. So it's gone up 15% today. Cardano. Yeah, so just those, and yeah, they're the ones that the kids have gotten. You know, they're doing, like a boy in my son's school has made $16 million and he's 16.
I'm not surprised.
Yeah.
That's what we call natives today. You know, like they the day that they're born, you know, they already have seen technology. You know, like my son's been playing with, like, or at least looking at phones and iPads or televisions, you know, since he was like 3 months old, right? Like I probably only really got to that when I was like 5 or 6, really.
Yeah.
You know, and this was like really early, so I was like one of the so-called pioneers. But you know, I still managed to see the life before it turned into fully digitized. They now just come out and like they're already like natives, you know. So I think their level of understanding and their level of maturity in whatever space that is up and coming is actually, you know, probably a couple of magnitudes higher than like both of us, because they live and breathe it, you know, like, and among their friends, everybody lives and breathes it as well.
Yeah. At 16, well, they're not even, they're turning 16, and I think my son now does like 6 hours a day watching different videos and watching things. He's NFTing and he's doing you know, all different things. But when the kids just come over and he shows me a video of him, you know, buying $2 million worth of Ethereum, it's like, oh, you know, look at this. It's crazy, but it's just so normal for them now. And that's what I love with my son. It's, you know, he's got in his head he's retiring at 18, and, you know, and it's just good that they've got this opportunity to see that they can do this. Like somebody has done it, and then they can achieve this and not have to just go out and slog and dig holes and work like that too. So yeah.
I think it allows us to have that freedom, because you know, like again, you know, like we were sort of, when we were young, we always thought that, okay, you know, like in order to get to where we need to go, we have to actually start work, spend 30 years, you know, buy a house, pay your mortgage off, get your home, everything. You know, by the time you retire, you should have enough until you die. And now it's more like, okay, you know, like let's quickly get to that point where we can be completely independent of, you know, needing to have a place to stay, needing to have food to eat, and then find something we're passionate about, and find something that we can really, you know, influence and change in this world for better cause, right?
Yes.
That's the shift.
Yes, the shift. That's what I love. Yep. Yeah. Thank you.
Thanks, Chelsea.
Thanks, Chelsea. Who else has got some questions? I know you got plenty of questions. There's all I say to people, Jet, you could spend like every day, 7 days a week, all the time on the crypto market, and then probably only still cover maybe 10% of it.
Yeah, it's never boring though. I mean, like there's so much news, there's so much you know, like insights that are coming out, and there's also a lot of you know, information that's actually being shared. And I think that's the best thing about the space, really. Everybody's just so happy to share, and you know, to, you know, like because it's what's the right word, like you know, we're a bit like neurons, and every time we share something, it sort of gets propagated down the network, and then someone else might get an epiphany that creates, you know, the next sort of wave of, you know, like insights, you know, so it sort of works in that way.
Okay, and then before we go as well, I mean, if anyone feels to jump in or type any questions, there you have as well. But obviously the next wave is like we're looking at a transition, hopefully, to decentralized banking, but where what the new term is DeFi, or decentralized finance, and staking. Do you want to comment on that while we're waiting for anyone else that might have any questions?
Yeah, so decentralized finance essentially is you know, the next step you know, in the journey. So right, if you look at let's look at something old, trains, right? Like, you know, first you got to lay the train tracks. That's blockchain, right? So you're laying the train tracks one block at a time, right? Now we've got like tracks. Then the next step is you want to have train stations. And so DeFi is basically like train stations. You have pooled resources in one place, and people can visit that place and, you know, like use that as a transit point. That's what DeFi is, right? If I had to really simplify it back down to, you know, like you know, some really elementary things. So with DeFi, you know, essentially what the goal is to be able to, so now you have the coins, right, and the network, but you still need to exchange. When I say exchange, is you still need to convert this native currency back into a national currency. And the only way that we can do that today is by going to an exchange. And an exchange is like it's like the border customs. You know, like when we enter Australia, we have to, you know, stand in front of the screen, and they take a photo of you, and they compare the photo of you with the photo of you in the passport, and they say, okay, you know, there's a 85% similarity, so he can go, you know. And they have the similar system for banking as well, right? Like they'll say, okay, like, you know, this transaction came from, you know, a person that's in Australia, you know, he doesn't have, he's not in a potentially but politically exposed persons, you know, he's not on the sanction list, you know, he doesn't come from like restricted countries, he's okay. And that works, though what happens is that it creates a choke point, right? So, and DeFi is looking at addressing these choke points. Doesn't mean that it will completely replace it, I think it will supplement it, because I don't see it as completely possible that we will eliminate the centralized banking system or all of the controls that we have. Neither do I think we need to do that. You know, like we still associate ourselves with, you know, like a country that we reside in, a country that we were born in, a country that we, you know, like have deep affection for. It's not going to go away. And same thing with currency, you know, it's not going to go away. And so cryptocurrency is only going to supplement what we have today. It's not going to replace it. And I think a lot of people that are sort of like, you know, hoping that one day it will replace it. It's a long journey, but I think it's actually a very noble goal. I just don't know whether we'll achieve it in our lifetime.
Well, I know some purists that have sort of moved away. You know, they went all in, and they've done quite well actually. They went all in maybe 5 years ago, and then rode the dips out, and have really done quite well. And then they're transacting with cryptocurrency and trying to remove themselves from the fiat system as much as possible.
I think it's very, very tricky because we have laws that actually prevent that. Just for an example would be that we are actually legally obliged to, you know, like do sales in Australian dollars in Australia. You know, we're not allowed to, you know, like run a business and, you know, like transact in foreign currency. It has to be converted back into Australian dollars. In the accounting system, or, you know, like if it was just face-to-face, it still has to be converted back in Australian dollars. You know, like if you were doing legal business, right? So, and legal is because there was a law that states that we have to do it that way. Hence, that's why it's almost impossible to detach from that system unless you run a homestead, you know, you grow your own food, and you live in a community of other people that do the same thing. The problem or the challenge with that is that you won't be able to have access to tools and, you know, things that require currency. You won't be able to buy an iPhone. You won't be able to buy a computer. You won't be able to buy a car. You know, so that's the limitation, or that's where the you know, the challenges lie. You know, if you want to completely detach yourself.
Yeah. Okay. And then just if anyone else has any questions, just put your hand up or jump in or type your questions in there for Jet. You were spending a bit of time with us as we start digging deeper into the cryptocurrency conversation, because there's so much content to cover in the coming months, Jet. But just as a snapshot, like where do you see us in this market at this point in time moving forward?
This is a very interesting question. So what I've noticed in at least in the markets lately is that people are actually buying up and they're taking the coins off the exchanges. If you were to look at some graphs that show, you know, like outflow of Bitcoins from exchanges, you will see that it's accelerating. That just means that people are actually like putting money into an exchange, you know, buying whatever coins that they want, pulling it out of an exchange. At some point, the exchanges are not going to have enough of those coins, you know, to allow people to pull them out, especially if someone comes in with a huge volume. And when that happens, it will create, you know, obviously, you know, a supply shock, kind of like what happened to oil, right? Like it's gone from, you know, like something like, I think, $2 a gallon to something like $7 in a short span of like 2 months. Or even, actually, it's just,
Whether that's real or manufactured as well, Jet, that's the thing, you know. Scarcity, there's always the scarcity concept. Oh, we can blame Russia for it though.
Tell me about it. So yeah, I think the main sort of outlook would be, you know, like if we were in a situation that, you know, we were only holding paper currency, you know, like Australian dollars, right? And we're watching, you know, I'll give you a real life example. Today, I went to Aldi to buy diapers for my kid. You know, I was only paying $9.99 like just 2 weeks ago. Today is $10.99. You know, it's like an extra dollar. That's 10%.
Yeah.
You know, like and that's real, like it hits you really hard, because you have to spend diapers every single day. Yeah, so that's where I think the question for people that are looking to come in now is that, are you happy to be holding on to your Australian dollars, watching the value that you have deteriorate further?
Diminish, yeah.
If you are, then great, you can continue holding on. If you're not, then you might want to start diversifying. Like, I don't think any of us are going to completely get rid of Australian dollars, right? Like, we live here, we use it. So we're going to have, like, circulation of it. The thing that we want to do is, like, what can we do to, like, perhaps cushion the blow? Because everything's sort of moving in sort of like a cyclical pattern, right? Like, so we don't want to be caught where we just have, that one thing, and it's right at the bottom of the trough, like, then you get hit hardest, right? So we're trying to basically, like, make the trough a bit more shallow, and hopefully, like, if we can flatline it or make it into a bump, it would be even nicer.
Yeah,
and that's the goal.
Yeah, but also talking to clients as well about staking their currencies as well, and being able to earn, be able to hopefully increase the value of the currencies, but also through staking be able to earn, maybe 12%, 13% per annum through the staking of their currencies.
Yeah, I think just before I answer that, I think I've seen a question from Chelsea saying that I don't understand what that means, pull out of exchange. So what that means is that, when you have an account with an exchange like Binance or SwiftX or CoinSpot, when you send money to that exchange and you buy the coins and you leave them in that exchange, it's basically still in the custody of the exchange. And when I say pull out of an exchange, is you pull that currency out into your own personal wallet,
into a hard wallet,
into like your mobile wallet that's on your phone, or into your hardware wallet like a ledger. That's what I mean by pulling out of an exchange.
Thank you. Cohen, do we have a hard wallet? Yes. Okay. Cohen's got a hard wallet. Okay.
Yeah.
Good.
And how does one get a hard wallet? Because I think I've got mine in my exchange as well.
So there's a couple of things you can do. You can actually...
I'm a complete novice, so I've got no idea about anything.
You can always download mobile wallets. One of the very popular wallet today that has multiple currencies is called Trust Wallet. TRUST, Trust. You can see, I'll show you the app. It looks like a shield.
Uh-huh.
I'm not sure if you can see it there. See the one with the shield?
Blurry. Oh, yes. Yep.
Yeah.
Got it, yep.
That one's Trust Wallet. So that one has like multiple currencies in there. That's not the most secure. So like if you use that and you put in your phone and you lose your phone, then potentially you might lose all your coins. So a hardware wallet is like it's like two-factor authentication. It's a physical device. It mostly looks like a thumb drive. It looks something like that. It's a thumb drive, sort of like a thumb drive looking thing.
Yes.
And you have a pin on this thumb drive.
Okay.
So even if someone physically stole this from you, you'd be able to restore your secret key into another one of these. So that's an extra layer of protection. So this is sort of like one of the most secure ways of keeping your coins really today.
Okay.
And you can buy them on the certain shops that sell them. I can probably pass the links to Paul and he can share
that'd be good
with you.
The supply chain for even the hard wallets got a bit tough there as well, because the components were difficult to be delivered. So we couldn't find any consistent suppliers.
Yeah.
And you need to make sure that they're actually the good quality ones, and not, you can buy cheap imitations and that sort of thing.
Yeah, they're not about the quality. It's just that you don't want to be buying a counterfeit product, because if you buy a counterfeit product, it can actually have like sort of vulnerabilities in there. So people can use a backdoor to like find out your 12 word or 24 word key.
Mm.
So you always have to buy from authorized resellers. The very well-known authorized reseller in Australia is called CoinStop.
Mhm.
CoinStop. We can get Paul to send you the
Yeah, I'll
link
send the
to
links
the
through.
official website, to sort of have a
Mhm.
look there.
Yeah. Cool.
Awesome. Cool.
Okay. That might be just about all time we've got time for tonight, Jet, but thanks for your time. We'll do a lot more catch-ups, and there's a lot of ground that we've got to catch up on with crypto and that sort of thing, particularly as the market starts to develop and mature as well. So, I mean, it can be a little bit of a confusing space and difficult for people to navigate initially, now that we're up to nearly 20,000 currencies or something in the world.
Yeah.
And so I do appreciate your time, Jet. Thanks for giving it to us, and we'll check in regularly as we start to cover off more on crypto as time goes, and we'll be doing more coaching with clients, etc., moving forward.
Likewise, thank you all for your time
Okay.
today and your interest in this space, and hopefully you will keep it going and get really good at it, and then you will sort of really start to see where like it can take you or what it can actually do. As we start to know more, then we'll start to see the possibilities. If we don't really explore it, like explore the path, you don't see the possibilities.
Yeah, absolutely. Great. Thanks for your time, Jet. Much appreciated.
Thank you,
Thank
everyone.
you so much.
Thanks,
All right.
guys.
Take care.
Thanks for
Good night.
listening. Cheers.